Hello, everybody. Welcome to another episode of Simply Finance with Shane White. I am your host. It's Monday, May 4th, and it's been an interesting start to the week. We're now headed into the first full week of May. We're still all stuck at home here in Chicago due to the coronavirus pandemic, and things have been unfolding in the markets. And today's episode is going to kind of rehash a little bit about what I talked about on Friday. Kind of ironic, when I recorded the episode Friday, I gave a lot of you guys some guidance out of reviewing the American Airlines earnings that came out from Q1 of 2020 and kind of walked you guys through exactly what I think the future might hold for investing in airlines. Then on Saturday, our best friend of the show and a popular listener to Simply Finance, Warren Buffett, he decided to come out and let everyone know that he sold all of his shares of all four major airlines. So today has been a rough day for the airlines, as you can imagine. And I just kind of want to walk you guys through an updated perspective and just kind of explain to you by reading that. It's a huge headline in the investment community coming out of the weekend. He announced it at the Berkshire Hathaway virtual investor meeting on Saturday. And so I kind of wanted to just explain to you what that really means in the short term, long term, and whether that changes anything from my perspective for investing. We've talked about Warren Buffett on here before. If you're anyone who's involved in investing, you've probably at least heard of his name. He's one of the most successful investors ever. He's one of the wealthiest people in the world, and he's done most of that through his investments. So we'll dive into that. So the markets just closed shortly ago. It was slightly green day for all of the major markets that we track on SimpliFinance. So the Dow was up 0.11%, the S&P up 0.43%. The NASDAQ led the way. Tech actually did pretty well today at 1.23%. And then the Shane Index actually did pretty well too. It beat out the Dow and the S&P and fell just behind the NASDAQ, up 0.9% on the day. Really heavily weighted towards USO stock. As I mentioned before, airlines got smoked, but this story continues to play out when I talk about diversifying, and even in the Shane Index, which is those 5 companies that we invested in a couple weeks ago. You can see from that just the different breadth of companies, how that's allowed me to really ride the wave, whether it's good or bad, with the market. And usually this is what I've been trying to say, the way it's diversified, it's not going to outperform the market most days. It's also not going to underperform the market most days, but usually it's going to trend on the upper side of either of those extremes. So far, it's been holding pretty steady with that. So I'm happy to show that. So I want to walk you guys through a little bit about what happened on Saturday, what that means, as I mentioned, for the airline industry. And then I pulled some stats that I'll share with all of you. I will add this in a new tab of the stock market rebound tracker, just so you guys are aware of it and have it in there. As always, it's in the link to the show notes. It's kind of like the main information deck that I do a lot of work for the podcast in. It's information that all of you can take and run with, and hopefully help make better decisions financially for all of you. It's a great way to see like what stocks I'm focused on, the ones I'm looking at, and then the ones I'm actually investing in, to kind of just give all of you a rundown of the topics we talk on here and how to actually apply them to your own investment strategies. So what I wanted to do was kind of explain what happened. So let's just back it up. Berkshire Hathaway is a huge holding company that Warren Buffett owns. They own other companies like Geico Insurance, just to name one. And they had a huge amount of investment in the United States variety of airlines companies. Okay, 4 of the main ones: American, United, Delta, and Southwest Airlines. Now, as of Saturday, Warren Buffett announced that Berkshire Hathaway has sold all of their positions. So they've sold all of their shares of the airlines, which is a crazy offloading, especially for Warren Buffett. He even admitted that, his bet on the airlines industry proved to be wrong, which I love that when you see someone as famous and wealthy and successful as him to have the humility to tell people when they're wrong. It's where I've gotten a lot of, I guess, my perspective on this channel and SimpliFinance as a whole is just being honest and sharing with you guys as I learn. No one's right all the time, and I think it's important to be honest and transparent with everybody. So they sold all of their earnings, all of their positions with all of those major airlines. And like I said, it was around $4 billion of investments that they sold off just in these airlines. So an enormous sell-off, and it affected the market today. All four of those airlines down nearly 10%, between 5 and 10%. And what I wanted to give everyone preference to, I'm just going to go through all four of those airlines. I want to walk you through the price today versus the previous low in the history of that stock, and then how much that price has changed from today back until February 14th, which there's a few days there depending on the stocks you're looking at and the part or the sector of the market you're looking at. But in general, I use February 14th, or really like Valentine's Day, as kind of where things started to really go over the hill and down in the stock market because of the coronavirus pandemic looming ahead and the scare that there was. So American Airlines, today they finished the day trading at $9.92 a share. If we look back over the history of American Airlines, they haven't been trading as long as some of these other guys. But before that, their previous low was $24.85. So they are 60% lower than their previous low in the history of trading American Airlines. So a drastic low dollar value that they now sit at. If we look back just a few months ago, not even 3 months ago, on February 14th, they closed the day at $30.47. So today versus Valentine's Day in February, they're down 67%. So for me, that's kind of like where I benchmark where these are in the grand scheme of where they've traded, right? This is an important thing to start off with as we talk through this. I'll move to United. They finished today at $25.49. Their previous low, now they were trading during the 2008 financial crisis, so that was their lowest ever. This pandemic actually never got, or at least at this point, has not gotten to the lowest value that they were at, and that was at $5.22, which, it's low. But from 2008 until February 14th, they went from 522 back all the way to 79.55. So a ton of gain over the last decade plus out of the 2008 financial crisis. So from the previous low at 25.49 versus 522, we're still up 388%, which is a lot from their previous 2008 low. But if you look back to February 14th, they are down 68%. So and just keep paying attention. I'm going to explain at the end why I'm giving you these percent differences, okay? The next one is Delta. So they finished today at 22.73. Their previous low, very similar to United, was back in 2008 during the financial crisis. They closed, the lowest they ever closed at back then was $4.79. On February 14th, they were not up quite as high as United, but they're still up. They finished the day at 58.90. So versus 2008, they're still up today 375%. So if you're someone who invested back after the 2008 crisis, and you're still holding on, you still have a lot of your money, right? But versus February 14th of this year, they're down 61%. So American 67, United 68, Delta 61 since February 14th of this year. Southwest Airlines finished today at 27.81. Their previous low, this is a little bit unfair as a comparison, but this is the reality of it, was when they went public, which was back in 1979, if you believe it or not. So a long time ago, at 18 cents a share. So obviously we are well above that. But back in February 14th, they finished the day at 57.97. So to put that in comparison, they're still up 15,000% from if you would have invested on their IPO day back in 1979. I doubt there's too many people that still hold ownership stakes back from then, but if you did, good for you. And if you invested, or if you were in the market back in February 14th, though, Southwest has declined the least out of these four. They're down 52%, but still a drastic decline for Southwest Airlines as well. So what I wanted to kind of break this down and explain to you is people are freaking out. Warren Buffett has to run a company. He's got to give back to his shareholders. He's worried that this coronavirus is going to impact the airlines for a lot longer period of time than he originally thought. That's why he and his counterparts sold their stake in a lot of the airlines. And I don't disagree with him. The longer we do this, the longer we learn about this, the longer it takes for us to even find the peak of the pandemic, new cases, new daily deaths. It does seem like this is going to go on for a long time. And then even when we're coming over the edge, like how long is it going to take for people to want to fly again? Whether that's for fun or it's for work. And if it's for work, do we really need to be traveling as much as we used to? Do you need to go to that business meeting across the country for a few hours? In reality, now it's not just money you're spending for your company. It's potentially, your health that could be in the balance. So I think there's going to be a lot of people who potentially are going to change the way they do business. Even you can see people are doing really well. I'm hearing from all across the different industries of friends and family that I, have been talking with, that people have actually been shockingly impressed with how well we've all been able to use Zoom and technology to still communicate, not in person. So I agree with Warren Buffett when he says things might be impacted for a lot longer than we originally thought. I don't disagree with that. What I wanted to tell you, though, is especially American Airlines, for example, their price today is 60% lower than it's ever been before. Ever been. No, they weren't traded back during the financial crisis. They didn't go public until 2013, I believe. So this is the worst, by far, the worst economic impact they've ever seen. But in my eyes, I'm thinking about the airlines in a long-term perspective. And I think I talk about a lot on the podcast, that you kind of have to pick your investment strategy. You got to stay in your lane. You got to do what's right. If you're someone who needs to have short-term gains, you need this money to turn around and be worth something more in a short period of time. I would have before, and I think I've mentioned this on this podcast, but after looking more into it, yeah, it's probably not somewhere you want to be. Is it low? Yeah. Will it continue to go low? Maybe. Or lower, maybe. Is it going to turn around and be a great investment? Probably, but who knows, right? Like, this industry could be changed to some degree forever out of this. But what I'm thinking is, if you look at even from the February 14th timeframe, so we're talking less than 3 months, these companies, American down 67, United down 68, Delta down 61, and Southwest down 52%. These companies are facing an incredibly difficult business time frame for them. Not having people fly, it just obviously just completely debilitates their business model. They don't have a business without people flying in their planes. Will in years from now, we look back and be like, that was a crazy period of time. Holy shit, I hope we don't have to do this again. But are we back to doing a lot of those things? I think to some degree, yes. I think there's going to be a new normal. There might be different ways we have to interact in public for a long time. But I don't think these airlines are gone. And I could be totally wrong here. So I don't want anyone to take this advice and act like I have this magic 8-ball. I don't. Just like Warren Buffett doesn't, no one does. But the way I'm thinking about this, and if you're someone like me who, I'm in my late 20s, these stocks to me are so cheap. They're so cheap. If things turn around in 2 months and people are flying again, or if it's 5 months, let's even say it's a year before people are really starting to fly again, I'm going to keep these stocks in my, what I'm going to call, quote unquote, retirement dividend pile, is what I'm going to call it today. And what that is there's going to be a chunk of stocks that pay dividends that have been in business for years, who are staples to the United States economy, that are things that aren't fads, that are not going to go away, that over a long period of time, And when we're all older and looking for, multiple revenue streams through retirement, when we don't want to work our day jobs, in my opinion, these are the stocks that could be the ones that end up paying for your life and lifestyle when you're older. So that's where I'm putting these stocks. They're going to be, I have not decided when I'm pulling the trigger. I'm putting a lot of money towards these, but I think it makes sense to put them in my portfolio and just sit on them. Don't touch them. These are not to be sold, and they're to just sit and grow. Because I think sooner or later, most likely later, things will turn around and we're not going to see these kind of prices again, unless we have another horrible pandemic or some unforeseen economic condition, which we always will have from decade to decade. There will be other things. So that's not to say that this is the lowest. I'm absolutely not saying that. What I'm saying is looking at their businesses, looking at their financials, looking at their historical prices, and looking at what's actually happening. These are great prices. So that's all I wanted to say. I don't want I think what happens is you have headline. People are looking for headlines these days. They're looking for interesting things to talk about. If Warren Buffett comes out and sells 4 stocks worth $4 billion, that is going to make financial headline news for a week, if not longer, right? And so I just want to get on here and kind of explain to you what that means, why he's doing it, right? He needs to make his shareholders happy, and telling them that he's going to sit on companies for the next 20, 30 years and hope they come back is not a strategy that is going to embed confidence across his shareholders. But that's not what individual investors like you and I can do. We only have to make ourselves and our families happy by the investments we make today. So I hope that's helpful. Like I said, I will add this information to the stock market rebound tracker that is in the show notes. Thank you for listening, folks. I hope you guys are all staying safe. I hope you're learning a ton during this coronavirus pandemic, especially investing. I know for me, like doing this podcast and trying to work with all of you to answer questions, put out content a lot and help answer the questions you have and try to teach a lot of these concepts that are really important to know. I know myself, I feel like I've learned so much by being at home and having a little extra time in the mornings or the evenings to do these podcasts. So I hope you feel the same value. If there's anything you'd love for me to cover, I would love for anyone to reach out and let me know, either in the comments or DM. If you know me personally, text me, call me, let me know. Thanks again for listening, folks. Please stay healthy, stay safe, and we will be back tomorrow with another episode of Simply Finance. All right, guys, have a great evening. See you later.